everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so you can better understand it tomorrow. And today we're taking a look at the good old crude oil futures. They just rolled over today, so if you're watching this and you haven't rolled over, you might want to double check that. They are trading the 11.17 today. Now, the overall movement is relatively bearish. They tried to break above that $50 mark, and with the rollover, we gapped a little bit higher. We were under the $50 mark on the previous market front month, but then when we rolled over, we were back above it again. So that $50 mark comes back into play. Now, we don't start trading until 8 o'clock in the room, but when we come in, we see this really nice downtrend in play. They try to turn up with a big bullish move and just really bad follow through, and they gave it all back right there in kind of a twin reversal with just a big distance gap between the two. About 2 hours worth of distance where the market didn't do a whole lot before finding that twin reversal back down again. And from there, we have a big spike into a beautiful descending wedge. Now, this descending wedge, this is where things get a little bit interesting, because we have a spike down, a major failure off of the highs all through here, and continuation to the downside in the form of a spike down into a wedge. Normally it's a spike in channel. In this case, it ended up being a spike in wedge. And a lot of sellers are going to be looking at this momentum thinking, well, I know I don't want to sell low anymore because the lows, that hasn't worked for a while. I want to sell at better prices. They're going to be looking for traps. They're going to be looking for exhaustion. They're going to be looking for the buyers doing too much too quickly. And I mean, pretty much any reason they can get their hands on. Here, initially, we have a small little bull channel working its way up off of the lows, and the buyers blow off the top. That is going to be a very obvious area where sellers are going to begin scaling in and selling into the move back lower again. So that is why there is the arrow there. That is the first area to sell to push the market back down again for movement lower. Now, in this case, they didn't actually make it all the way back down to a new low. They made it down to where the market closed on the bottom, but that's as far as they went. So with that failure to continue, they tried going back up again and formed a double top and didn't get any further, turning back down again. So a double top, turning back lower in an area that we already knew was exhausted for the buyers. That is another follow-up selling opportunity. But that wasn't good enough. The market really wanted to get some trapping here on crude and ended up going with a wider channel on the way up. Looking at a wider channel on the way up here, and they come to the highs of the channel. Now, a couple things that are interesting here. First of all, we have previous day's resistance coming into play, this brown line right here. And then we also have the previous swing high, swing low combination. So you have an area of interest that's already built in here, arguably all the way up to the highs. And when the market came into that zone, it immediately found rejection back down. So aggressive sellers will look at that thinking, well, this might be a good way to jump in. Another big blow-off candle on the highs. It worked really well here. Why wouldn't I anticipate it working well here also, right? So it gives them a way to get in a little bit early, and that turns out to be pretty close to the highs. So a nice selling opportunity for aggressive sellers. Now, there are going to be conservative sellers who aren't a big fan of selling while the market is still rallying up, even if it does look exhausted. So we get a failure on the highs into a bear turn lower, and that is the sellers who are waiting for confirmation. They're going to be jumping in there. Now, notice they never triggered in the sellers underneath that bear candle, which is why there's a second arrow here. It never would have triggered in sellers underneath that bear candle. It went weak bull and then failed down again. So the sellers who didn't just slap the sell market button on the close of that bear candle, well, they had an opportunity to sell this one next. And that's really where that big dive lower, after a little bit of a pause, took place back down below 50. So a really interesting day where the market seemed really trappy. Crude oil trapped the high, pulled down, right? Nice selling opportunity. Trapped the high again, pulled down, nice selling opportunity. And then finally, that one last bam, right? They slam everybody, get a bunch of traps on the high, and then collapse all the way back down to the lows. And that forces a lot of sellers who may have been stuck on that move higher that kept getting trapped out. Now they're chasing the market, and they're selling the lows, and they're forcing the market to continue down aggressively. So a great example of market psychology when you're looking at a trappy kind of environment. And it just shows that patience is definitely your friend when you're picking up on a market being a little bit more vindictive than other ones. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting and entertaining, and we'll see you next time.